Hi everybody, it's FIBO Group, and you are watching to the Market Watch review. The euro has been affected by a calmer European debt market and the second consecutive fall in German two-year yields. In the European morning, it briefly fell below $1.14. The equity markets are generally higher. The exceptions were India, China, Hong Kong, and Hong Kong in the east. Stoxx 600 in Europe is continuing yesterday's gains, but it has not yet taken out the pre-weekend peak. Futures in the USA are more stable. Sterling has seen the dollar edge up, while the Gilts are under stress and the Swiss Franc is the most resilient. The heaviest currencies are the Canadian dollar and Japanese yen. The currencies of emerging markets are generally lower. The rally in gold seems to be stagnating after a $1.15 gain of 2 days. Oil is recovering as the March WTI contract fell below $1.90. Asian Pacific market. 3 developments are worth noting in Japan. The US and Japan reached a deal to lift steel tariffs of 25% starting April 1, 2018. The deal will allow 125 million tons of steel to be shipped to America each year without the levy. Second, December saw a 0.1% increase in household spending. Third, the seasonal patterns held in Japan's current balance declined in December compared to November. The US dollar has risen 6 days against the Japanese yen to a record high of JPY 115.50. The Australian dollar trades a little more firm. Yesterday's gains were extended to $7,140. Market of Europe. Lagarde, president of the ECB, rebutted against a claim that it could raise rates prior to bond buying. Lagarde supported the sequence, which was to end the asset purchase program purchases shortly before the first hike. France posted a record December trade deficit of 11.3 billion euros. Exports declined by 0.4%, while imports increased 2.5%. After briefly falling below $1,400 in European morning, the euro made a bid. Sterling is slightly higher but still has resistance in the $1,3555 to $1,3560 region. Market of America. The U.S. Economic Diary today features the December trade balance, despite the fact that no Fed speakers are scheduled for today. Federal Reserve to stop buying treasuries next month, U.S. funding requirements would appear to be growing. Canada today reported its December merchandise trade figures. Canada is experiencing a positive terms of trade shock. The average monthly trade surplus was CAD 771 million through November 2013. In February, the US dollar created a shelf in the CAD 1,2650 to CAD 1,2660 region. If this area holds, then the greenback could move up to the top of the recent range that was close to CAD 1,2800. That's all for me. Closely monitor the news background and be prepared for all the surprises of the market.